Best ever listeners, welcome to the Best Ever CRE podcast. I'm your host, Joe Cornwell, and today I am joined by Justin Burke. Justin is the managing partner of VitaCare Living, that is assisted living facility. First time on the show. So, Justin, welcome. How are you today?
I'm doing well, and thanks for the invite, Joe. I appreciate you having me on.
Well, we appreciate you joining us. So, since it's your first time, let's start with a little bit of your background. Where are you from? What brought you into real estate? And then what ultimately led you into assisted living?
Sure. Yeah, I'm actually a farm kid from Northern Illinois, and I ended up in college. I played small college football, and when I got done, I started a coaching career in small college football. But after my first season, I was done recruiting in January, and so I needed a job, and I ended up working in mobile loan closing. So I was working for title companies closing refinance loans at people's homes. So I kind of started the real estate industry on the closing end, reading closing packages. So I think that I would recommend that to anybody as a way to start. And so I kind of worked backwards because my next job was as a loan officer and got to learn a little bit of the finance part of it and how that process worked, and um, ended up working on a lot of short sales. My goal was to be a real estate investor, and that the next people I met were working on short sales before short sales were cool. So I started learning how to negotiate with banks, and it turned out we needed to list and sell a lot of those. And so ended up getting a real estate license, kind of reluctantly. But over the next couple of years, I did a lot of, I sold a lot of 1 to 4 unit uh, rental properties that were underwater. And so for a short time, I was kind of a go-to guy for a lot of investors to get rid of their portfolios. So, once that dried up, I ended up working for a private investment firm. And during all this time, I'm trying to build a coaching career in the fall and trying to do two things at once. And so I've kind of finally realized while I was working with that private investment group that I needed to pick one. And so it ended up being the one that paid. And so I took a step back from coaching and went full on into, both feet in 100% into real estate. And yeah, it was around that time that I started to be attracted to assisted living. Everybody understands the baby boomer wave and why that's attractive and all the demographics around that. And so um, over the next couple of years, I started looking at deals, and in 2020, bought our first partner and I bought our first two 12-bed houses. It was a little mom and pop operation, and we've grown from there.
And that was assisted living?
Yep, that was assisted living.
So, tell me a little bit about the ideology behind that. Like, what attracted you to assisted living? What made you want to do that, as opposed to all the other dozens of other asset types in commercial and residential real estate?
Sure, assisted living. I started to, as I studied economics more and more, which I felt I had to do working for the firm that I worked for at the time. It becomes evident that the baby boomer generation tends to drive most of the economic results that we have over time, and we even saw that in other countries like Japan. And so I thought that was very important. And, I worked on a few assisted living deals and, had to learn a lot of the economics around those, and just very attracted to the rapid increase in the number of, it's obviously a rapid demand increase coming.
Yeah.
So there's supposed to be like a 30% increase in those aged 80 and above coming in the next decade. And there really wasn't a lot of institutional money getting involved yet. So that was coming. I saw that on the horizon as well. So I just decided that was a space that I wanted to be involved in for the next decade or so.
Yeah, that makes sense. And touching on that a little bit, I have been in real estate for the last 9 years or so. Bought my first residential house in 2011. But I remember even coming right out of the Great Recession, right? When I was, kind of a young adult, started paying attention to, the economy and the world around me. And obviously having lived through, everything that happened in 08, 09 as a very young adult. Um, Even then, I remember talking to agents, and this is before I was a broker myself, but I remember talking to agents about there was going to be this huge boom of inventory and the housing market was going to crash again. So they were kind of talking about how it was going to recover and then it was going to crash because there was going to be just millions and millions and millions of homes hitting the market. And they thought that flood of inventory was going to be obviously really compress pricing, right? Because you have all these sellers and not enough buyers. And it honestly seems like over the last, let's call it 15 years now, it never really happened. It certainly didn't happen in that massive wave that people kind of talked about. And I don't, I've heard other people talk about the economics behind this and some of the factors. Maybe the boomer generation is living more, staying in home longer. They're doing more in-home care. But obviously, being this is your business, dealing with housing for the aging population. What has happened and what has been different from maybe your expectations?
My expectations around
Just the demand for assisted living and has that demand met or exceeded or not met your expectations?
I think it's generally met our expectations. When we got in, we bought our first, like I said, properties in 2020, and we knew at that time that really the baby boomer wave coming into assisted living hasn't not really hit yet.
Yeah.
The oldest baby boomers are still not quite 80 years old yet. They're
Mm-hmm.
like 78,
Mm-hmm.
79. And the average assisted living resident is 83 to
Okay.
86, I would say. So that wave really hasn't hit yet. And that's what a lot of people, if you don't dive into it, you don't really understand yet, is that we knew that we were serving kind of greatest generation at the time,
Mm.
which is a relatively small generation group. But so that's still in front of us. The large part of it's still in front of us. And I think that's why institutional money is not involved yet. But we've seen a pretty strong increase, especially coming out of 2020. So buying in 2020 was a really nice time to buy.
Yeah.
There was a lot of, and what we were looking for was kind of mom and pops who wanted to exit because they had been involved for 20 years. And now you have a increasing regulatory environment, number one, especially in Minnesota where we were at. And then you had the whole, COVID thing going on, which would put a lot of strain. It was a very, very tough time on everyone working in assisted living. And a lot of the people that were at retirement age decided now's the time, even though prices are down, they're way above what I thought they would ever be. And so we got in at some pretty attractive pricing and interest rates at the time that we
Yeah.
were buying.
Yeah, that's great. Well, yeah, walk me through. I know you mentioned kind of high level that first deal you did. Tell me a little more about it. Give me the numbers on it and whatever you can share.
Yeah, it was too small. They're converted single family homes. So it was, for us, that's I think those are the only two non purpose built properties that we have. Bought it from a mom and pop. Very very nice people. I think they did a good job starting up this business and running it. What we tried to do, once we closed on those two, I think we paid 1.5 total for those two houses. Um, and once we closed on those two, now brokers are bringing us other deals. And those two were in a bit more of a rural area. And we had some properties brought to us in the Duluth, Minnesota area, which is more 80,000, I think, is the population around that area, a little bit bigger of a market. And so we took down a few more. And what we thought we could do was use our current leadership staff that we kind of inherited at those first two properties to expand. And they were excited about it. We felt good about them. And that turned out to be a pretty big mistake, as it's not something they could handle. And
What specifically?
couldn't handle the leadership aspect of it, and couldn't handle the differences in the markets. And
What was like the physical distance between the properties?
physical difference would be the Duluth properties were purpose built.
I'm sorry, the physical distance, like with the
Distance. Sorry,
miles, drive time, hour and a half.
Yeah,
drive.
hour and a half. So the distance wasn't as much of an issue, but the surrounding culture was a little bit different of an issue. Rural versus a little more, um, definitely not urban, but kind of a smaller city. And yeah, so those differences didn't work out very well. And we probably waited a little too long to replace that leadership. And so we took a little bit of a dive after we acquired those properties. But, we ended up identifying some really great leadership that at the time left us. But once we made the changes, they came back to us. And really what we've done is just try to treat them the best that we can. And that's served us really well. So
Yeah.
they've done really well. We went from losing money at quite a pace. We were hemorrhaging money pretty badly for a time, and we have a pretty solid, 20 to 23% operating margin is what we've been working at for about a year and a half.
Got it.
In the Minnesota properties.
So the smaller deals, you said $1.5 million purchase price, and then how many beds was it?
Really, 24 licensed beds total.
24 licensed bed. Now, are these shared like multiple beds in a room? Like, what's the setup?
Yeah, there's each house has 10 rooms, but 2 of them are shared. 2 of them are licensed for 2 beds, so they'd be shared rooms.
Okay, and then what are these people paying on average monthly for this service?
Our private pay rates range from about $6,000 to about $7,500
Per month.
But about 80% of our residents are on Medicaid funded programs.
Okay.
And that in Minnesota, we average about $7,500 per month in total reimbursements for our Medicaid people. So we're just over 7,000 total as far as what we average per resident per month in total revenue.
Okay, and then what occupancy were you kind of maintaining on those deals? Is that like always full? Is it there are multiple vacancies? Like, how does that work?
We hang just above 90%.
Okay.
So there's always that turnover.
So on a smaller deal like that, you got a $1.5 million purchase price. Your gross revenue somewhere around 60 some thousand a month, something like that. Is that about right? Okay. And then what sort of expenses do you have out of staff for that type of property?
Well, we share some staffing expenses with Duluth because we kind of wrap everything into one. So we have a total in Minnesota. We have a total of 92 beds, and our total staffing and our total payroll ends up being, around, let's say 220 a month.
Well, just so if we could, like, what is it for that first deal, the 20 beds?
Yeah, for that first, just for those properties.
I'm sorry, was it 10 or was it 20? I don't remember. Or you said.
Well, yeah, it's 12, and then we actually bought another 8 bed near those later on. So it's kind of a group of 3 at this point. And so we, about $70,000 a month for those 3
in the revenue. Okay. And then on that deal, like roughly, what do you think your expenses are monthly?
Yeah, I'd say, that 70,000 is payroll. We bring in about 165 a month. Total expenses, we run around 120.
Okay. Got it. And that's between the 3 properties?
Yeah. In the rural area.
In the rural area. And that's all your expenses. That's mortgage. That's utilities. That's all your staff. Obviously, whatever inventory expenses, things like that. So, comparing that to, and the reason why I'm getting into all these numbers is I'm trying to give the best ever listeners a picture of what is the upside in these types of deals that inherently, I would assume, right? I'm going to make some assumptions here that these are inherently a lot more management intensive between residents, staff, liability, insurance, licensing, all these other things that you have to kind of extra hoops you have to jump through from a real estate standpoint. Obviously, the expectation is it's a significantly higher profit margins. That is all fair assumptions.
Yeah. Yeah, okay. Absolutely.
Okay.
Yeah, and that's why we got in, and we experienced some really strong profit margins immediately, and then as we saw, once the operations start to suffer, the numbers can swing really quickly, and I think that's the big thing to understand for any real estate investor getting into assisted living, because we've seen there's a lot of them, and the ones that don't do well are the ones that think that they treat it like multifamily, and what they it's not just a real estate investment. You can do it that way, but the operations is what makes or breaks it. And what makes or breaks operations is, for me, is culture. And so I run VitaCare Living the same way that I would coach a football team. It's a group of people trying to do something together, and so we have to have alignment behind a purpose and a vision, and we have to be a great place for great people to work.
Yeah.
And so when you're that and you have a team of great people, you're going to win. And so that's been our focus, is putting together a team of great people, and that's what they do is win.
Yeah. Tell me about that. How do you find good people? Let's start with that.
Well, I think the first thing that you have to do is, I was just having a discussion about this yesterday, and I think the way to think about it is, it's a sales transaction just like any other, right? And so if you're going to sell somebody on the opportunity of working at your company, you first have to have a product to sell. So what is the product that you're selling? And that's one of the first things that we did when we were forming a company around VitaCare is decide, well, what's our purpose going to be? And at the time we called it a mission statement, but I think a mission statement, if you're going to have one, has to be easily repeatable by everybody who works for you. So ours is to add life to the years of our residents and staff. It's one sentence. It focuses around the word to add life. That's what we're here to do, and because we're not here to add years to the lives of our people just to do that. We're about having our residents live their best day of their life every day. And so we want to add life to their years. That's our purpose. Everyone at our company knows it. It's not just on our walls. We talk about it all the time. And then we clearly define the character of the people that we need to have in our organization, because it's the people that are going to share character values that are going to form a strong culture. So that culture is our product. When you're talking about how do you attract great people, they're attracted to our culture. So when we define out 7 attributes that are essential to the people in our culture, and we rally around those.
Tell me a little bit more about that.
So our essential 7 attributes are extreme ownership. You have to own outcomes, resourcefulness, having a big why, being committed to growth, being committed to humility and gratitude, and reliability. Reliability ends up being a big one. So when we have those are in our job ads, those are a big part of our interview process, and we talk about those very consistently every day. And around any disciplinary process that we have, we're going to refer to attributes and here's where you're falling short. We grade our staff on those right now quarterly. We want to get to monthly, so they're not only graded on the accountabilities that they have that are measurable. We give them a 1 to 5 grade on each attribute. Everybody in our company is graded on that, so that we know who are our top people, who are our bottom people. Because, something I talk about with our people all the time is Nick Saban talks about this. It's one of my favorite concepts. Is that high achievers can't stand mediocre people, and mediocre people can't stand high achievers. And so what we see in healthcare, and probably a lot of other businesses, everyone who's struggling with staffing, they're trying to keep everybody. And what happens when you try to keep everybody and try to keep people from quitting is you treat your best people the worst, and you treat your worst people the best. And so what happens is you try to keep everybody, you won't keep everybody. So if you try to keep everybody, your best people are going to leave, your worst people are going to stay, and they're going to run the show.
Oh, yeah.
So it's all about, for us, preserving that culture by we pour into and we give everything we can to our top people, and the bottom people get the leftovers, or they get ushered out the door.
Yeah, I love that. I could talk for an hour just about that idea, but I came from a law enforcement background. I was a police officer for 10 years, and one thing I learned working in government is that when you are, this is not just law enforcement. This applies to almost any government role, right? You are typically in a union. the expectations are pretty low typically, and there is almost no incentive, and honestly there's a lot of disincentive for, especially in law enforcement, for being a really hard worker, someone who really is out there trying to make a positive impact on the community. And you know, not to get into all the law enforcement or the politics of it or anything like that, but just, the fundamental idea is that for a lot of people who work in government, you can look around and say, why am I working 3 times, 5 times, 10 times harder than the guy or gal next to me when we're making the exact same money? And not only that, but they're being rewarded for being lazy or incompetent or whatever, whatever the case may have been in that instance. And I think that, goes right back to your point that happens in the private sector as well, where, I own a construction business now. And so I deal with this all the time, where we're constantly trying to pull our lowest performing employees along with us. It's almost like, I feel like there's people in our company that pull us along, and then there's people that we have to pull along, until like you're dragging them up the street. And that physical, literally has that physical weight of trying to pull somebody along with you and get them on the program. So yeah, I couldn't agree with that more, that sentiment. And like I said, I could talk all day about that.
Same.
I mean, coming from your football background, right? I mean, that's, obviously you've already given us kind of a lot of those analogies from your experience at being involved in sports and football, and being a coach and a player. I never played sports past high school. Well, I play like rec basketball now, but I never played organized sports since high school. But that's always the idea in sport, in any sport, right? I think you gave the analogy. It's a collective of people trying to accomplish one goal or a set of goals. And I think that's amazing correlation and translation into the private sector that a lot of people don't have that experience or that background to lean on.
Yeah, no, exactly. There's not a lot of differences. And so to me, it's confusing as to why do we have to put somebody on the schedule when we know they're not good?
Yeah.
We wouldn't put them on the field if we were competing with another team. So if we're competing against being the best we can be, why are we putting our worst people out there?
Yeah.
And why are we letting them choose who they want to, what time schedules they want to work, or what shifts they want to work when?
So how do you manage that?
They said, we should cut them.
Yeah. So that's your answer? Just, we let go of the people, the weak links in the organization, and then how do you replace them? I think that's the issue most business owners face, is a fear of letting go of any sort of manpower, is because they fear, are they able to replace them with someone better or worse or at all?
Yeah. Yeah. So I'll tell you this, right now we have 24 houses in 17 communities. And so everything that we've acquired has been a turnaround of some sort after those first two. And even those first two ended up being kind of a turnaround, just because we have to install our culture. And so we've dealt with a situation many times where you have a director on site and we're in crisis, we're short-staffed. Every single time, the first thing that needs to happen when they're short-staffed is they have too many people on their roster. They think the answer is hiring more people, and it's not. The first thing they have to do, and we've done this over and over again, is we need to find which 2 or 3 people are the problems, and they need to go. So that's a little bit simplistic. It's not always that simple, but there's a couple of people that need to go, because you're having problems covering all your shifts, because there's people who don't want to work with those people, and there's people who are demotivated. They're picking up shifts in companies, and they're avoiding this. So when we get those people out the door, all of a sudden we have a smaller roster and we're not short-staffed anymore. So take care of your best people, and they'll take care of you, because they start going above and beyond when because you've worked, just like you talked about in your experience as a police officer. And most people have had that experience where they work somewhere and they can't stand this one other person or 2 other people.
Yeah.
It's demotivating. It sucks. But when your supervisor actively gets rid of them, and you know that they care about you in that way, you give 10, 20% more.
Yeah.
That's what happens. You get 10, 20% more out of all your other people, and they cover whatever you need to cover. And then that's where our best people always come from, is the people that already work for us that love it. They're the ones who are in these communities, and they know other people in that industry. They know other people who work in similar jobs, and they bring them over from other companies who aren't treating them well. So
Yeah.
I think that's been our biggest thing. Obviously, we run a lot of ads, and we have a very complex or a very rigid hiring process, which I think helps. But
Yeah, and that was going to be my next question. How are you motivating the right talent to come to your company as opposed to any of the competition? Is this, give me some examples of some of the incentives you're giving them. And now it sounds like, before you answer that, it sounds like you're handling the things inside the walls of your business in a way that obviously would help retain people. That all makes sense. But how are you getting them in the door in the first place for the talented people?
yeah, I mean, obviously, the first thing everyone's going to think about is compensation, because nobody. I mean, this isn't youth sports. We're not here just for the love of the game. Everyone's here. Our people love working for VitaCare, but they're there ultimately for their families.
Sure.
And so, our philosophy on compensation is we want to pay in the 75th percentile of whatever market rate is for a position. And our people know this. I don't. They can all listen to this. I tell them they know this. Is that because my philosophy is 50% is average. So we're not here to be average. Um, we're not here to go 500. We're here to win. So we don't want to be average. 100th percentile. If you're paying more than anybody else in your space, that's because you're the worst place to work. That's our experience. So anybody who's left because of, oh my gosh, well, I can get this amazing pay rate over somewhere else. We've had a lot of those people come back because the only thing that they have to offer, again, just like any other sales, if the only thing you have to offer is price, you're going to lose.
Yeah.
You have to be offering value for whatever it is you're attracting. So we want to pay above average. So we want to be around the 75th percentile, whether it's 70% or 80%, whatever. So we start there with compensation. We offer the best benefits package we can offer. And then from there, we make sure our job ads are not average. So our job ads are covering, we want to talk about we want to talk about our culture, because that's not what most places talk about. They talk about just compensation and hours and all the boring stuff. We want people at VitaCare who believe in who we are as a group of people and believe in our values and share our values. So it's the best people are attracted to that stuff because they care about what they do and they're not just here for a paycheck. The ones who are just looking for a paycheck, we're not looking for.
Yeah.
And especially in a business like this, you got to the things that you have to do, and you're going to get poop on your hands at some point. That you can't just be here for a paycheck.
Yeah. Yeah. I mean, so the community I worked in law enforcement, we had 2 assisted living facilities, large facilities. So yeah, I mean, I spent a lot more time in those facilities than I ever wanted to. And one of them was like an actual nursing unit. The other one was more of like just assisted living. But yeah, I definitely my hat and heart goes out to all of those people who work in those industries, on the floor. Cause I know can be a thankless job for sure. You deal with a lot of, obviously mental issues, physical issues, and it's not an easy job by any means.
It's a special group of people that do that job. So
yeah,
the ones that are good, you got to take care of them.
Awesome. Well, I've loved this conversation on philosophy, your corporate culture, all of these things. When it comes to the actual real estate aspect of it, give me. I'm going to make up a hypothetical and I want you to kind of break it down as to how you would look at this differently. Let's just say hypothetically you had a $10 million assisted living facility you were looking at underwriting, or a $10 million multifamily, because I want our listeners to really be able to visualize why they should be considering assisted living, why they should be considering investing in assisted living, maybe if they're passive. So give me, as best you can, a rough mock-up of that hypothetical. And what I mean by that is like, what type of facility is this? How many beds? What kind of staff? And then what sort of, ROI are you going to make assumptions of based on those 2 type of purchase prices?
Sure. I mean, in the $10 million range, you're going to be, depending on what markets you're in, you're going to be probably somewhere around 100 beds, whether it's one building or multiple buildings. I think it's, important considerations are going to be continuum of care, the age in place concept. Is there independent living? Is there assisted living? And is there memory care? Um, and then obviously most markets have a shortage of assisted living beds, a pretty extreme shortage. So that to me, that's a consideration because we're looking into the future and saying, well, how are we going to stay full? And you don't want to have to fight that battle. Um, I mean, as far as just pure multifamily goes, I think you're just going to find that the deals that you underwrite, you're going to have a little bit thinner margin, but it's not going to be as labor intensive.
Right.
Um, I think you're, like we talked about, we're seeing, and these are even lower than what they historically have been. I know in the late 20 teens, there was a lot of 30% type operating margins. We're not quite seeing that, but we're able to stay over 20% pretty consistently, and it's really about how good you are operationally.
Yeah.
Is what's going to determine your margin, because there's a lot of different levers to pull, and there's a lot of different. It's what level of care do you have, and well, what state are you in? Are you looking at just private pay, or are you looking at Medicaid funded programs, um, things like that? So I think if you have a good operator, or if you have the ability to our strength is I think I have the ability to put together a great team of people and to create a great environment for them to do great things. So in that environment, I think we're going to win. And just from a numbers perspective, like I told you, we're able to get top end rates. We have people who care about whether we're wasting resources or not. There's just too many people involved in too many opportunities for waste to not have strong oversight on that. And there's just a lot more moving parts in assisted living, but there's a bigger profit potential.
Yeah.
So,
no, I mean, that makes sense. And I think most people today, right, obviously right now, multifamily is in a tough place with interest rates and things like that. Most people are probably underwriting somewhere between an 8 and 12% cash on cash return on a multifamily asset. If it was mostly stabilized, and of course there's so many variables, so it's hard to really break down that hypothetical I gave you. But assuming all things were equal, that I really want people to understand the possibilities and the pros and cons of considering, assisted living and residential care. Now, when you look at the actual breakdown of a deal like this, is this traditional, 20 to 30% down? Like, walk me through how you would finance a deal like that if you were going to buy assisted living facility that was a $10 million property.
Yeah, I think right now we're seeing what banks are willing to do is anywhere from 65 to 75%.
Okay, so pretty in line with multifamily or something like that.
It is. We got a few done at 80%. It depends on the bank. It's we have one bank that we did a couple of deals with who merged. They merged with a few other banks, and now their new organizational structure, they decided they don't want to be involved in assisted living. And so, there's that. We work with a lot of smaller local banks as kind of our goal. But I think generally you're going to find you should be able to get around 75%. So we look for sellers to carry back about 10% at minimum. And then
is that common in that industry?
I think it's common enough. It's common for us because we decided we're not doing, as a capital environment kind of changed on us, we decided that was going to be a must. And, the motivated ones do, because they're mom and pops generally that we've seen trying to retire. And it's always that conversation about like, well, they seem to have never thought through, well, what am I going to do with this stack of capital,
Mm.
right? You have capital in the form of an assisted living business right now, but now you're going to convert it into what? And a pile of cash usually is not a good idea. So
Yeah.
we kind of talk them through, helping understand, well, what do you want from this? And so they can get a kind of a pile of cash and go somewhere with it, but then they can continue with a stream of income. So it's
Okay.
I don't think
So
it's
they're
easy.
seller financing usually part of these deals, and then you're bringing the other 10 to 15, whatever percent down as needed to close the deal.
Yeah, we're raising private capital for that part of the stack, for the equity part of the stack as well. So
Okay.
yeah, we'll bring a piece and then we'll be equity investors alongside of our investor partners.
What was the largest purchase you did?
Our largest one was a portfolio in Northwest Wisconsin. It was 13.7 million.
Okay.
That was 244 beds.
And a single owner, single seller for that? Okay. So they had a portfolio?
Yeah.
Gotcha.
Yep. That was
Yeah.
that was quite a turnaround.
So when you look at the greater economic, market or factors we're in here, right? So we're recording this right around the midway point of 2025. Obviously, there's a lot of things, happening in the news. There's potential wars. There's tariffs. There's obviously still elevated, interest rates that don't seem to be moving. How do all of those factors or concerns affect your industry?
I mean, we're still going to see a ton of demand, right? So that's the thing that's going to be strong for us. It doesn't appear that at the current rate of construction, there's still a pretty massive shortfall and a pretty severe need for additional units.
Mm-hmm.
It doesn't look like we're going to catch up anytime soon. One thing that's interesting is that the average baby boomer net worth is just over $200,000. And when you start diving in and looking at the extended retirement period that they're going to have compared to previous generations,
Yeah,
there's probably not going to be a lot of that net worth left, and some of that's going to be protected from Medicaid anyways. By the time they get to assisted living, and what we're seeing now, I don't think is going to change a whole lot. Is that even most of the people that come in as private pay, they end up running, right, their assets run out and then they go to a Medicaid program.
Yeah.
And so I think that's, for us, that's an important consideration when we underwrite based on Medicare rates, because eventually all of them turn into Medicare. And for us, that's a huge opportunity because a lot of the places that are operating right now, they're only required to take 10 or 15%, public pay or Medicaid funded residents. And what they're trying to stick with, 95% plus private pay.
Mm.
And then when somebody runs out of assets, a lot of times they find alternative placement for them. So for us, the way we underwrite it, our deals all work if we're 100%, public pay. Usually it ends up being a little bit lower rates.
Yeah.
So, our worst case scenario is everybody's public pay. We still have some pretty decent margins, and that keeps our demand high. And we don't have to move people out, which is also, again, that's important. Now that goes to the culture in the house. It's hard for staff to lose residents for any reason. And I think that just makes us stronger as a business overall. So I think that's an important factor to look at. But I think they're talking about we need an additional 564,000 assisted living units in the United States by 2030. And the current projections were only at about 191,000.
Mm.
So,
yeah, back to like how we kind of opened this conversation. It's like I think you said a stat that the average assisted living resident is 83. Was that correct?
Yeah, about 83 to
Yeah.
86. I think it's increasing.
So that definitely would have, yeah. And my guess is when I heard all these people talking about the big wave of boomers selling off and going and downsizing or going to assisted living 15 years ago, right? That I'm assuming that that average age was quite a bit lower at that point. So it's almost like we we've kind of kicked this can down the road, so to speak, where, as you mentioned, people are retiring later, people are working longer, people are staying in home longer, people are living longer, and so it's almost like this big boom has continuously been delayed, and not only delayed but also spread out over many years instead of a few short years.
Yeah, exactly. It's delayed it longer, but then I think that wave is going to last a little bit longer than we first thought as well.
Yeah. All right. Well, I'm going to summarize everything I've learned, and you tell me if there's anything I'm missing. But it sounds like, and this is, admittedly one of the few pieces of real estate I do not know a lot about. But it sounds like if you want to get into the assisted living game, that you can expect probably a little bit better than market returns and margins compared to like traditional multifamily. But there's going to be a lot more management intensive on both the staff, obviously your residents, and all the systems and inner workings, because this really is another business on top of the real estate business. And that it seems to be one of the most important factors is how much demand is there in the market, how much demand are you projecting in the future, and obviously what is the existing inventory of the assisted living in the markets that you're underwriting. What did I miss?
I would be in agreement with all of that. I would say operational strategy as well would be an important thing to consider about, what type of care level you're going to have, and just continue. It's really easy to look for that, the nice old lady who just needs help getting to the dinner table and needs someone to make food for her.
Mm-hmm.
And that's increasingly less common. And that's not really where the money is. The money is in the people who need cares.
Yeah.
And that's kind of what we're moving to. But again, it takes a staff of great people, and you can really make that work.
Meaning having actual having actual nurses on staff, having physicians, potentially oversee, having pharmacy, having those sort of things on site, or obviously in close proximity to administer care, medicine, all of those things.
Exactly.
Yeah. Well, Justin, I know I learned a lot. Any other final thoughts you want to leave us with today before you go?
No, I think I think we pretty much covered everything I thought we'd talk about.
Well, I appreciate all of your patience. I know it took us a couple tries to get this call finally underway, so I appreciate you sticking with us and giving us your time. What is the best way for our best ever listeners to connect with you and learn more about your business?
Yep, I'm happy to get any emails. It's just justin.burke@vitacareliving.com, and you can find me on LinkedIn as well. So I'm happy to hear from anybody, and happy to get into a discussion about any of this in assisted living. Just like you said, I could talk for a long time. So,
well, we really appreciate your time. Like I said, I learned a lot about the residential assisted living, and thank you so much for joining us today.
Yeah, thanks for having me.
Best ever listeners, if you enjoyed today's episode, be sure to leave us a 5-star review and share this with someone who could value from it. Make sure you're following and subscribe to the podcast so you don't miss any. Thank you all for listening. Have a best ever day.